Google and Meta no longer the kingpins of online advertising. That's according to data covered by the Wall Street Journal. Research from Insider Intelligence that was in the journal finding that these two accounted for less than half now of digital ad spending in the U.S. in 2022. First time they've dropped below that threshold since 2014. Their advertising market share expected to shrink to less than 45% this year as competitors like Netflix and TikTok grow in influence. Mark Mahaney, Evercore ISI's head of internet research, joins me now to discuss. Is this something that you think the market is already on top of?
I think largely, and you have to kind of differentiate them a little bit. I think the company that most underperformed the market was probably Meta/Facebook, and that's because they had such a hit from those Apple privacy changes. When all is said and done, their ad revenue declined in 22, we think, by about 2% year over year. Now, you got to adjust for currency, but it's still very low single-digit % growth year over year. They clearly underperformed the market. Google was probably darn close to the market, just a few shades below it. Then you've got these kind of upstarts. Now, Amazon's not an upstart. They're doing 37, 38 billion in revenue. And my guess, Sarah, is that they're probably the next company to generate 100 billion in ad revenue. I mean, this is a couple of years down the road. They have a lot of things going well for them right now. TikTok could, too, except we've now got a lot of political uncertainty over TikTok. So then you have to look at some other sources, new sources of growth. And I think Netflix is one of the more intriguing ones out there. But very early days for them.
Yeah, no, TikTok, obviously a share gainer on ads, but lots of talk, as you mentioned, about the political implications here for TikTok, whether it's going to get banned. I heard a lot about this. Has anything changed there fundamentally where you think that this could happen? And if so, does Meta, is it a beneficiary? Is it that simple?
And Meta would definitely be a beneficiary. So would Google to some extent, because I think the data we've looked at shows that TikTok's time, that's tough to say quickly. TikTok's time has come in part from YouTube, and then and Snap would be a company that would benefit from a TikTok ban. I don't think a TikTok ban is imminent, but I think the odds of it have increased enormously over the last 6 months. I mean, there's a government procedure in place that require divestiture, and it doesn't seem like there was a deal was able to be reached between the U.S. government and ByteDance. I don't think ByteDance is going to look to will voluntarily divest TikTok. So it's kind of hard not to come to the conclusion that there's a distinct ban of TikTok, like has happened in other countries like India within the next couple of years. And I think advertisers at some level probably know that. And I think that's why advertising revenue, I think, is actually weakened at TikTok over the last couple of quarters based on sources we've talked to.
So of everyone in your universe, you've got a completely different landscape than you were presented with,
Yes.
hey, since this time last year in terms of multiples and estimates. Which do you think are most out of whack? Now that you have a fresh set, 2023, which valuations just look ridiculous to you?
I don't know about ridiculous, but we've had multiples de-risk across the space. We've had estimates cut, materially. We've had a lot of cost actions, which also has helped kind of reduce fundamental risk at these names. And so I still look at a sector where it's very heavily levered to consumer discretionary spend. So revenue growth is going to be slowing down for almost all of these names unless they have a new product cycle, unless they're somewhat recession resilient. And that kind of points me towards two names that I particularly like for this year. I want to be really tactical about this, but I like Netflix and I like Uber. I think they hold up relatively well in a recession, and Netflix in particular has got the most interesting new product catalyst out in the space with this ad offering that is taking off slowly, but there's a lot of potential here, and Netflix wins so many different ways from the rollout of this ad-supported offering. I like Netflix right here, right now.
Got it. Mark Mahaney, thank you very much. Netflix and all these media names are some interesting outperformers today on a down day. Meta at the very top of the list, up 3.7%.